GIF Warriors. How are you? Steve doesn't want me to threaten him. I think I'm a terrorist. Everyone doing okay? Hope you had a great week. Hello, Claudia. Good morning to you too. I just want to go over an experience I believe many traders have, and I've had a million times. Have you ever noticed that markets will try and wear you out of a position and bias and trade that you're in? And then, you may make a few attempts. Hello, Mark. I'm retired. Like to audit your site for insights. Okay. And you get worn out and you finally give up. You say, oh, you know what? I hate that pair. And then the trade you're looking for happens without you after the market, Mr. Market has worn you out. Yeah. Okay. We have sound. Everything's good. All right. So that's what I think has happened in EG. It's been a grinder. I've been looking for a correction for a while. This wasn't it. Right up here. And here's why. Okay. It's a little thing, but it's a big thing. You see this RSI reading up here? It was a confirmed high. So we went up into this high before the pullback and confirmed it. So on the 1 hour, it was even a little bit more dramatic. Let me show the 2 hour. Yeah, see 2 hour? See that RSI reading? It confirmed it. And now look at it. Glaring divergence. So it's almost like the market had to make another run at new highs. And I've been, I was there for some of this, and I've been trying to scalp it for a turn because I do think that although I'm long-term bullish, and Steve and I talked about this, I do believe that we're going to correct this wave here. I have confluence of moving averages around 87.80 because people that have been on phase for a long time, when we were doing this, I always thought that we'd get a move up towards 94 again. Okay, but I'm looking for one pause here before we go to 94. So this is your weekly chart, and here's your monthly chart. So up here at 94, it'll be a lower high than we had in 08. Okay, it'll also be a 3 driver. So I always felt that it was incomplete up here. And let's see where the line's going to come in, about 90, maybe even 95 in the coming days. So coming weeks. But first I'm looking for this correction. We'll see if I get it. I've been persistent, actually sold another one today at 80. Still doing nothing wrong on the week, but starting to get a little reversal to the downside. We'll see if it follows through. Okay, so bullish short, bullish long term, saw it down here, the breakout over 86.5. So this area was so important, this 87 level, 87.20, 86.50, that you think it might just revisit it one more time before blasting up towards 94 or so, which are my longer term targets. Okay. The yen is higher on the week. It didn't do enough yet. I'm not going to get a 2-week reversal on the yen, but it did show in the face of, bond strength. Some decent buying came in. And next week, it's not going to be hard for it to post a 2-week reversal. Next week, all we need is a close over 107.31. Okay, we're above that now. Still my contention that the yen is doing something right. I don't think we'll come back inside of this wedge line. Let me draw it. So this red line I had for a long time, and we had a throw over. Okay, and now we're back above it. So I think there's a good chance that we have maybe a significant bottom here in the end. And I think a great test would be if the dollar is going to break to new lows, take out 95.80, and the yen does not take out this low from this week. It was 6.80. that's going to be another tell. So watch that. We have people coming in buying gold at 1,400 on the big round number, and we've gotten a little bit of a pop on it. Rallied about 13 bucks, but you know what? Someone sold it up here. So it's starting to look like on a daily, we're going to have some type of ABC. So this was 40. And if we take an equality target from today's high, that'll give you 1384, which is still above the breakout being 77. So there might be a test of the breakout coming in the gold next week or in the coming days. So we'll see if we get that type of equality target. ABC. A was 40 bucks. We'll see if we get a C here. And I just want to thank everyone. Don't let the market wear you out. Yeah. Okay. So who hasn't subscribed yet? Give me a why. And tell me why, if you don't mind. You know, if you really can't afford a subscription, if that's really the truth, 100 a month or so, 150 a month for coverage, I really don't know if you should be trading on your own. Because if this is prohibitive to spend money to educate yourself, be part of a great community, that's really an issue. What are you risking every time you click the mouse? So really, I think suitability is very important. I know a lot of people trade that really aren't suitable to trade. You know why? Because they're not trading risk capital. Don't trade your mortgage money. Okay. Don't trade your Social Security check. You know, if you're in that position, save and don't speculate until you could look at the money that you. All right, let me get radical. Okay, I used to have my own IB, and I solicited futures accounts, options accounts, etc. And I would tell people, you see that check that you're funding that account with? I want you to imagine striking a match and lighting that check up. And if that makes you nervous, it's not risk capital. So that's the match test. Okay. You don't want to give it all up and lose it all. But if you're attached and very emotional about every dollar and every time you pull the trigger, you're not in the right financial position to be taking risk and speculating. I'm sorry. I know a lot of people say, "Oh, you always can. You start with 500 bucks or $1,000 and turn it into 10," and those are charlatans. Okay, so anyway, Fridays for me is a great time to consider and do joining ForexAnalytix. So you could get to learn about navigating around the site. So you kind of pip, so let's do it over. Okay, look at Grega's cleaning up on Aussie. Blaker's long Euro, it's working. Euro Aussie's working. So all four of the patterns in play are working. Most of them for over 1%. So any one of these trades, if you came out here, would more than pay for a month subscription on a one lot. So it's up to you, of course, but we want you to succeed. And the team spends a lot of time on their research so that you can succeed and learn and be part of a community in the members chat with pros like Amanda and Joe and Andre and Blake and Steve and Stelios. So do that. And also go to our sponsors, which are contributing to having this be free for you. So it doesn't cost you any money to have a different account. In fact, you could end up with rebates if you don't have them. Most brokers offer them, and you could use the rebates for your own personal use or overseas to pay for your subscription, just going through the normal trading that you go through. Get a hold of Trent and Justin right here. They're always going to be available here. They're regulated. You could email them, or you could even click the Skype account, do a Skype request to those guys, and I guarantee you that the same day and within hours, they'll get back to you. So, interesting week we had. I think you have to say in the metals, looks like a blow off. Silver really flirting with this descending triangle. We'll see if it could hold. Yeah, but here we are. It's trying. Maybe it's going to make a move. Maybe this is a continuation formation. Maybe silver might start outperforming gold one day. Anyway, this doesn't look bad unless we close. See, we had some candlesticks underneath it, some wicks, but you could just do it on a closing basis under 15.17. So you risk 10 cents to be long silver, because if we come out of here, we're going to at least new highs, right? Because look at this high. What kind of high is that? Right there. It's a 78 reading. Any guesses?
Is it the C word, Dale? Good morning.
It is yes. Okay. Okay. Saving. Okay. It is confirmed. All right. So it implies that we will get another high that may or may not be confirmed. So you're right, Stella. It's the old C word, complicated. So thanks for hanging out with us this week. We had some great guests this week. Hope you enjoyed the interviews. You guys enjoying the interviews and getting something out of it? Yeah, Steve, you got it.
Do you have any guests today?
No.
Okay.
Not today.
Got it.
Yeah. Well, you want to be my guest?
I'll be your guest right now.
All right. Well, Blake, can you tell me how this all started for you?
No, I won't actually.
What an uncooperative.
No, I'm so sorry. I'm not up for it today. It's Friday.
All right.
No, but you know what's really interesting? I will obviously go over the markets here this morning, ahead of the PCE numbers that are coming out. And remember, we do have end of month, end of quarter flows that are coming through. A couple banks have reported that it should be some dollar selling coming through the market today. Be a little careful if you're long the dollar going into the fix, especially the London fix this morning at around 11 a.m. Eastern. But you know what? Something really interesting happened to me yesterday. I was just sitting here, and an old friend of mine, some of you may remember, a gentleman by the name of Nick Paragula. He was the Wise Trade algorithmic lead for Command Trade, is the name of the product that Wise Trade had. It was called Command Trade. It was an automated stock trading platform.
Huh.
And now this guy, I met him originally in 1999. He sat at, when we opened our brokerage firm in Dallas, he was one of the traders that sat, we only had like 8 traders, maybe 9 at our peak, something like that. He was one of the guys that traded with us. He's just a really, really neat guy. He's like 3 or 4 years older than me. Good family man. And he would get more upset about his trading. And I used to get upset because we were both fairly young, but at the time, I was in my 30s. He was in his 30s as well. But man, that guy used to get so angry sometimes at his trading. It was so funny. I used to break a keyboard, he'd break 2. I'd throw a mouse, he'd throw 3. It's like we shattered a lot of computer equipment over the years, out of frustration. But he obviously simmered down over the years. But he's an Iraq war veteran, tank commander, just a real cool, neat guy. Anyway, he stopped trading, I want to say about 7 or 8 years ago, he had to move back to Arkansas. His wife had a family situation where he had to move, and he couldn't trade manually anymore because of the obligations that he had. But he always used the command trade system. Even after he left the organization, he would use it to trigger, buy and sell, orders in equities. He had a good system that he would run that was very consistent. Anyway, that shut down a few years ago when Ally Financial shut down all of the Wise Trade products a couple years back. Anyway, he had reached out to me yesterday and he said, "Hey, I'm really, I've got the time now. I can really, start trading again, and I want to trade more currencies intraday. What are you guys doing?" And he's going to be involved with. For some of you that have listened to me on the webinars for many years, especially those that have, the long time listeners of 8-10 years and longer would remember Nick Paragula. He is just a really neat guy. Excuse me. He's gonna be jumping in the chat rooms and part of our community in the coming weeks. So I'm really excited to have him trading
here
again. So it's really cool.
You're saying hello.
Oh, what?
Nick is here. You said hello.
Oh, he's here. Oh, hey.
Nice to meet you.
Hey, Nick is well, I didn't know he would be listening in this morning. So he's a really, Nick, whatever I just said about you, don't believe any of that. Yeah. I'm just kidding. No, he's really just a really neat guy, and I'm excited to have him be part of the ForexAnalytix community. And for those of you that don't know, and I'm putting you guys on Jumbotron. This is our chat room. It's our private chat. It's only part of the ForexAnalytix community. You can see there's about that's not. Let's see. There is how many of us do we have online right now? We have. No, that's not what I wanted to do. There we go. We have, I must have clicked on some of these. You can see all the members here. There's 91 of us online right now. And that's, we have a very active community. So you can see everybody's saying hello. Nitish, nice. Anyway, that's part of, if you're part of the ForexAnalytix community, you can be involved in those chat rooms. And that's where I spend the majority of my day. And remember, if you're using ForexAnalytix, the product right here, and this is, obviously our product with all of our analysis, whether you're looking at Elliott waves, harmonic, basic, technical, whatever you're looking at, this is how you get to the chat room right here next to your icon. You can go to the chat room just by clicking on this little link right here, and that'll take you over to where we're at. So yeah, I'm excited to have Nick part of the community. Now let's talk about today and what we're dealing with today. So the euro is dipping a little bit into this. We have this pennant formation. We're dipping right into that trend line, which is providing support. 113.70 is some really good support for the euro dollar. I would expect that the real big support is going to be 113.50. Do keep in mind that we do have end of month flows that are supposed to be dollar negative, so we should see dollar buying coming in. A lot of people wondered why the euro dollar was coming under some pressure just about 30 minutes ago. I think a lot of that was the euro pound. The euro pound has shown a little bit of a reversal off of these highs. We just made a new high and then reversed. Now, I still think the euro pound, until proven otherwise, it still looks like we're grinding higher. The 88% retracement is coming into play just around the 90-cent level, but I think the euro pound is getting a little bit of stage fright as we approach the big figure at 90 cents or 90 pence rather. So we're seeing a little bit of selling. The pounds, got a little bit of a lift, but you guys know for the last week, and I've told you guys this a lot, I'm just not going to get excited about the cable while we're below this 127.70. So while we're below here, I'm not too overly excited. We did take note in the chat room yesterday that the cable has been sold pretty much, every day post London fix. We've seen the cable just kind of come under some pressure, in the New York session. You'd see right around the same time every day, the cable just kind of rolls over a little bit. I don't know if that's going to be necessarily the case today, especially with end of month, end of quarter flows. But with, equities making good gains this month, you're going to see a lot of the dollars, a lot of dollar selling, and all that money is being rerouted into whether it's the euro or the cable. You can see the Aussie is still pretty bullish. The Kiwi, we have a nice double bottom that is really formed in the Kiwi. So and that's been pretty consistent buying all week. I've tried to fade the Kiwi, not the New Zealand dollar per se, but I've tried to sell the Kiwi against crosses, and it's been very difficult. The Kiwi has been very bullish, even since the RBNZ, and even though that they did not cut rates, but still continue that they're going to cut rates in the future. The Kiwi has been strong. We are challenging the 50% retracement right now in the Kiwi dollar, but despite it being a little overbought, I don't know if I'd be in the camp of fading the Kiwi. It might do some consolidation.
Any thoughts on positions over the weekend into G20, buddy?
There's a risk. Obviously, the G20, as Trump is in Japan right now, and meeting with Z. I think expectations are pretty high for a quote unquote ceasefire of the trade war. So the risk is that really nothing gets done, and we might have a risk off coming into Monday. I think, post London fix, post the fix, I think you got to be really careful with any kind of risk on type of trades. I'm going to try to go into this weekend flat. I do own some euro dollar right now, as if you're following the patterns in play. I do have currently a small euro dollar long going, but I've been in and out of the euro quite frequently over the last few days. I've been just buying dips into the 50s and 60s, selling it up here in the 80s and 90s, and that's what I've been doing all week, which has been very lucrative. And that's just been my way of trading all week. You can see these dips into this flag or into the pennant. I've just been buying and kind of selling as we've gotten rallies, and then just buying dips. I've been doing that a lot. I probably will go into this weekend flat risk, because I am a little nervous of us making no headway, basically going into this weekend. And that could bring a little bit of risk on, and how that's going to translate into the currency market will probably be, stronger yen and potentially a stronger dollar, especially if all the other yen pairs get sold. So I think you got to be a little careful. I'm in a situation where it is end of month, end of quarter. Because I trade for a firm. I am more sensitive to end of quarter and end of month situations. In other words, I've had a good month. I don't want to piss it away on a Friday at the end of month, end of quarter. So I'm going to be pretty light today, and I plan on being light into the weekend. I figure that we can react going into Monday following the G20 versus trying to take any unnecessary risk over the weekend. So, I do believe it's a roll of the dice, especially when you're dealing with the erratic behavior of the president right now. I think that there are risks on both sides of the market. So anyway, that was a good question, Dale. Now, one of the things I also want to mention is we are going to go into, unless gold sells off quite dramatically today, which you can see gold is actually holding up really well. We are well above the breakout point, and gold is, well above 1380, 1375, this big breakout point. You got to be a little careful with gold. I think that gold being in breakout territory, as long as we close the week in breakout territory, which, you know, obviously is extremely bull. Go back and read the ForexAnalytix blog. You guys can see, you know, how bullish this development is. I mean, I'm going to go ahead and draw a little bit for you here. Where is my pen? There it is. I mean, you know, we have this big inverted head and shoulder pattern. That target takes us all the way out to about 1700 in gold. Big triangle consolidation. You know, I mean, this is a big breakout. No, there's no if and or buts about it. So as long as gold, you know, maintains above pretty much 1400, I think is really what you have to be looking at. As long as we maintain above that, there's no reason to be hold on, let me kill my drawings. How do I erase that? I'm still trying to get used to using.
I was tempted for the old joke. How do you erase that? Alt 4. But
well,
try,
you know,
please.
it's we're using you know, Zoom, which is took over GoToWebinar for us, and so I'm still trying to get used to all the drawing tools here. But as you guys know, I'm gonna be bullish on gold, and that automatically makes me more of a dollar bear as a result. But you know, if we do see some risk off, I think that you're going to see the dollar yen, which is going to be probably the most sensitive to you know, continued gold moves higher. You're going to see the dollar yen that you know, continues to trade poorly. And even though we've completed all these flag patterns, you know, this flag pattern completed, secondary flag pattern completed, we're working off oversold conditions. You know, while we remain below the 108 level, which is right here, while we remain below that 108 level, the risk still remains for a lower dollar yen exchange rate. And while gold is rallying, you know, the risk is stronger yen naturally. So with that being said, I'm going to pass it over to my colleague Steve and Stelios. Hey guys.
Good morning.
Hey, mate.
Good morning. Good morning
Blake,
to my
I don't think you'll
brothers.
be able. I don't think you'll be ever be able to order a Huawei phone because you can't really say it. Huawei. Okay.
Wow. Hey, you know, that's kind of a bummer, Steve. You know, Steve, you're a big Apple fanboy. You know, you love Apple products. How do you feel about John Ive leaving Apple? It's pretty big deal.
Ask me after they produce a few products without him, and then I will actually have an opinion.
Oh, well, you know what? You know, we're going back to the chocolate bar phone. What's that?
How does it, Steve? How do you feel about being a fanboy? Anything, huh?
Yeah.
Steve is a fanboy. He's an Apple. He's the first thing. I think the first thing that was said to me is that when I met Steve was, have you ever used an iPad?
Yeah.
Right, Steve? That was pretty much it.
But I was right, wasn't I?
You were. I love my iPad, and you got the iWatch, the iPhone, the Max, and too bad everything's gonna look like a candy bar phone.
And he has an eye disease too. Did you know that? I shorted this. I bought this. I went there. I bought this car.
All right, guys. Well, hey, we have just a moment before the core PCE data. So I'm going to pass it over to you guys. You guys have a great remainder of your Friday, of your trading week, and I'll see you on Monday.
Okay, Blake. Enjoy the summer weekend there.
All right, thanks, guys.
All right, buddy.
Blake. Okay, we have about around 30 seconds till data, so let's go through that first. Probably best to have USD CAD on the
because we have
screen.
Did.
And we have core PCE. Remember, this is what the Fed looks at when they try to gauge inflation, so it's quite important to them. And later we have some other minor, well, not minor, Chicago PMI, Michigan. Yeah, we have some stuff later on. So, but let's see this in about 10 seconds.
10 seconds.
There
Let's
we
see.
go. Standing by.
Okay, and second now.
Beep.
There we go. Canadian GDP stronger, 0.3 versus 0.1 expected.
Core PC in line.
Yeah.
Personal
Producer
spending
prices
in
were
line.
as well. US personal spending better than expected the month on month. US consumption as expected. So better Canadian data bottom line because GDP was quite better than expected. Canadian producer prices, though, a lot lower than expected. So that's it, actually.
Yeah.
I'm not expecting anything like ground moving from this. But the fact that we got better Canadian data combined with the fact that I was mentioning that a few days ago, Stelio, this ascending channel was like, super important from a technical perspective for USD CAD, and the USD CAD is currently trying to actually break below it. We are now also testing the previous low that we had in February, which was the yearly low. So for plenty of reasons, USD CAD is in danger of actually breaking down. I do think that Canadian dollar is going to be a very, very interesting pair to watch during the next few days, the upcoming week. What else did we have, Stelio, before we go through the charts?
Okay.
And now we have plenty of time. And
Yes.
unfortunately, not a lot has been moving in these markets. Summertime, no real news.
Well, so far summer markets have not been very summery. We've had quite a bit of stuff happening. But anyway, yes, today has been quiet. Let's start with the data, where we had some mixed data from Japan. CPI was lower than expected, but industrial production beat quite considerably. But really, this is not going to move much at this time. We also had, UK GDP came in at 0.5% quarter on quarter, 1.8% year on year, exactly as expected. Now, it's a lot of people mentioned that this GDP reading is still relatively high, if you can call it this, because a lot of front loading ahead of Brexit. Q2, Q3 are obviously going to be the big, the important ones. And then we also had Euro CPI 1.2% year on year, exactly as expected, and well below 2%. But having said all that, really, the main event is still the G20 meeting, where I think tomorrow, Donald Trump meets with Chinese leader Xi. He apparently had chat with Vladimir Putin. Trump did, and he said he jokingly said to Putin not to meddle in the upcoming election. So that was funny. But the more I look at the US and Trump and all that, the less how should I put it? The less confidence I have, because here is a person who's arguably the most powerful person on the planet, or one of the most powerful people on the planet, and he's being quite gung ho with what he's doing, and maybe this strategy in the end will pay off. I don't know, but I feel a little bit nervous. And we saw he seems to make random attacks, like a couple of days ago when he was talking about the Vietnam Dong. About the Vietnamese manipulating the currency or whatever he said. So it's like,
that's a main problem of the planet.
Scares me a little bit.
What the Vietnamese are doing with the currency.
Yeah, it's not like it's really affecting the US or the dollar that much, right? But anyway, it is what it is. We have to keep an eye on that.
Because of course the US doesn't manipulate its currency, all that QE and everything else. I mean, it's like a room full of thieves, and each one accusing the other one of being a thief. I mean, that's exactly the situation.
What is it? The balance sheet went from 2 trillion to 20 trillion in 10 years. Yeah, there's nothing to see here. Nothing to see here. Yeah. So overall, that's really the main event is this weekend with the G20, and let's see what that brings. But like Blake said, the risk is probably that nothing gets done, and risk assets take a move lower on Monday morning. But
that's a good pass. This is actually one of the reasons why I took profits in my DAX long. Mainly, I took the cue from seeing S&P stalling now in this area, so I'm thinking that perhaps there is a little bit more downside first. And ahead of the G20, I thought it's a good idea to take some profits here in the DAX. Now that doesn't mean that it can move higher, but I didn't want to have the exposure, so it was a 0.6% profit within a couple of days.
The DAX was actually pushed higher by, we had the US stress tests on banks, and they all passed, including Deutsche, which had failed on quite a few occasions, and Deutsche is up, 4% today, or something like that.
Yeah.
So that's
I know. They all passed. Of course, those tests are made for the banks to pass, because I'm a little bit anal with these things, so I take a look at what they stress test for out of curiosity, and it's really funny that they stress test for what they know that the banks will pass, and they never stress test for things that they know that the banks won't pass. So, for example, as you know, let's take the Fed as an example. They have like 3 scenarios they test, like a severe one, a very severe one, and an extreme one. Those are not the exact names they use, but you get the point.
Yeah.
So, according to the Fed, what is the worst possible thing that can happen under worst possible circumstances? Now, it's 10% unemployment, which we've seen before, and okay, it isn't good for sure. It is like a drop in asset prices, like something like 40-50%, which it has happened before. But combined with that, which are indeed very bad scenarios, that the cost of borrowing is going to go down, that the dollar is going to go up, and the 10-year yield is going to be at 1.5%. So bottom line, besides the unemployment going up and asset prices going down, the assumptions for everything else are in essence positive, right? That the market is going to respond the way it has always responded, that it's going to beat up the dollar, that it's going to take down yields, etc. So what happens if that doesn't happen? What happens if unemployment goes to 10%, asset prices move down, and I'm not going to say anything extreme, but the 10-year yield goes to 4%.
Yeah.
There's absolutely no bank that's going to survive that. But that's why they don't stress test for that. Okay. Yeah. So
good point. I mean, we've seen equities and bonds moving in tandem higher for years now. There's no reason why they, in a downturn, they shouldn't move lower, both of them. But yeah.
Anyhow, one thing is for sure, it's not impossible, okay? Because the inflation expectations, I forgot to say, in that extreme scenario is that inflation is going to go down to 1.5%. What if inflation doesn't go down? We've had stagflation before in the history of the US as well. So why not stress testing for something that has happened in the past? I'm not saying it's the likeliest scenario, but theoretically speaking, stress tests are not made for like the most prominent scenario, because you don't need stress tests for that, right? Anyhow.
Yep. Well, I'm just reading hottest temperature on record in France, 44.3 Celsius. Jesus.
Ooh, yeah. That's probably a breezy afternoon where Blake.
Steve, you hear anyone talking 4% yields anymore?
That's why we're getting there at some point.
Yeah,
no,
you think not. Yeah. Because I mean, I don't see anyone talking about higher rates anymore.
Of course not. They're not.
Yeah.
Because it's impossible that's going to happen again, right? And remember what has happened every single time in finance. Everybody in tandem accepted the fact that something is not likely to happen ever again.
Yeah, it's different this time.
Yeah, exactly. The new paradigm. It's different this time, and all that. Yeah, exactly.
Gunlich is probably the only bond bearer out there, I think.
I'm with him 100%. I listen to him on occasion. I mean, if it happens that I see somebody tweet and they have some time, some interview of his, so I've listened to him 2 or 3 times during the past 3 months, and I more or less agree with him. I think that he's more bearish than what he says, but he also wants to keep it politically correct. You know what I mean? He doesn't want to.
You don't want to scare people either.
First of all, and second of all, he doesn't want to be characterized as
a gloom and doomer.
A gloom and doomer. Yes. He wouldn't like that.
Like your idol, Peter Schiff.
He's not my idol, but yeah, I do agree with a lot.
Oh, come on. He's not your idol.
He's mine.
Elias's idol.
I like him. I like him.
Absolutely.
You like him more than Steve?
He likes him more than his wife. What are you talking about?
No comment.
Sorry, Semiramis, if you're listening. Okay.
How do we make money today? Sit on our hands.
How do we make money today? Today ahead of the G20, I'm not saying that people should be closing their positions. I did close one, but it's not that, for example, USD NOK, I'm still holding it and I'm going to hold it during the weekend. There's no question about it. I'm deep in the money. I have no reason not to. I think it's consolidating before another move lower, likely. I'm not advocating that people should close all positions, but I wouldn't be buying or selling something a few hours before the market closes, if that's what you're asking, Coach. Now, there are some.
You have an area where you'd be buying gold? I mean, they went for the big round number at 1400.
I can tell you one thing for sure, because we had this discussion in the chat room a few minutes ago. I can tell you one thing for sure is, if you like Kiwi lower, this is exactly where you sell it. Okay, because this is a triple confluence of resistances. We've talked about it several times during the past, actually during the past weeks, because we had been talking about it even since we were initially breaking above this descending wedge. Sorry for my voice, by the way. My wife got sick last week and now she's passed it through to me and my son.
My wife was beating me last night, right?
Yeah, exactly.
Strangling.
Yeah. Doctor said it's okay in a few days. Unless she's strangling me again.
Yeah.
So we've been talking about that area several times in the past, and as you see, this is a triple confluence of resistance. We have a horizontal support resistance area. We have the 50% fib. We also have the 200 daily moving average. So plus, if you want to add one more thing, this is the 10th consecutive update today. So even if you want to look at it from a perspective of like fading, a short-term fade of an aggressive move, you can even look at it like this. So if you really want to be doing something and you're just looking for for an appealing risk-reward opportunity, Kiwi is at the area you might want to do that. Now, if we break higher from 67.10, though, I have to tell you that then we also trigger like other stuff, like a double bottom, in which case I would be looking for an extension towards that high at 69.40. But this is the moment of truth. What happens from here? Now, same deal with the Aussie. I mentioned it yesterday, but today, both of them are, exactly on top of the areas we've been talking about. Give me a second, I need to cough. I'm going to kill my wife. So, Aussie also on confluence of resistance is here, just above 70 cents. Same deal here. If you're looking to fade this move, this is exactly the area you want to be doing it. Very appealing risk reward. You can just risk like 30, 40, 50 pips. And, even a mild pullback should take us, 50 pips lower. I mean, at the very least. Okay. So Aussie Kiwi, interesting. No questions asked about it. Aussie Yen, still not at resistance, but Kiwi Yen is also at resistance. You can see it here today, testing this confluence previous high, horizontal support resistance area. Keep in mind that this area, for example, is quite important. It had acted as support multiple times in the past, and once we finally broke below it, the first time we tested it, it acted as resistance. So we know the importance of this area. So, Kiwi Yen, more or less the same deal. I mean, at a key juncture, if you want to fade it, this is the place you want to do it. Now, having to do with the USD CAD, I want to go back to it, very briefly. 131 was the perfect equality of the two legs lower. We've already broken below it. And now, as I said, we're testing the previous low, and all that is happening while we're trading below this ascending multi-year ascending channel, right? Almost a 2-year ascending channel. This is a key development if it gets confirmed. Oh, this is going to be a painful webinar. Yeah, USD CAD definitely at the precipice of a big breakdown. Next area of interest, 130. Below that, 128. So as you see, then it becomes a slippery slope. Needless to say that if we accelerate further from here, even if you want to see it from an Elliott wave perspective, then we're going to be talking about wave 3 here, and the previous leg lower, wave 1, which means that there's going to be more downside coming even after a rebound. So, if this leg lower extends further, it's also going to signal that the next decent rebound should also be sold. Okay, and that's an important difference with if this proves to be a corrective move. Okay, let me go through some questions. EuroCAD, sure, something I haven't had a look at recently, but we can have a look at it together. So here is EuroCAD. Okay, last time we looked at it, I was expecting a potential breakdown from here because we had that first leg lower. Seems to be happening, although we're testing once again this previous low at 148.70. I would definitely keep favoring the downside with 147.50 being the next area of support. A break below 147.50 should probably accelerate even further to the downside. Seeing the recent behavior of Canadian dollar wouldn't really surprise me. I mean, yeah, it looks decent. I wouldn't be trading it though. I think there are better opportunities out there. The better looking opportunities from a technical perspective. But if you want to do something with it, I maintain a bearish bias. And here is use the Swiss. I'm not gonna go over the Euro USD. I bet Blake covered it, but I'm gonna tell you that USD Swiss seems to have stalled here. I wouldn't rule out another push higher to retest that 98.50 area, previous support as resistance. But in any case, I would be expecting a continuation lower following that. I still favor USD Swiss to the downside in comparison to Euro USD to the upside. It's been performing better. The inverse correlation is obviously there, but use the Swiss due to Euro Swiss breaking lower has been performing better to the downside than Euro USD to the upside. Now, having to do with cable, I don't know if Blake covered it, but I have only one thing to say, and that's very, very brief. I don't like the fact that we got rejected once again from this 128 area. I don't like it. I mean, I don't really care about it. It's not that I had a position, but if I were to be constructive with it, I would definitely not like it. When we got rejected, we also posted an outside black candle. I think that the pound remains by far the weakest of all currencies. As I was showing yesterday, there is a possibility, there is a case to be made for a bullish resolution, and that is if we're forming here an inverted head and shoulders formation. But even if that's the case, that won't change the fact that the pound seems to be underperforming other currencies, which means that if you want to really be short the dollar, there are better currencies to choose to do so. Now, I want to go to a 4-hour time frame both for the Aussie and the QE because I already showed you the importance of the resistance areas they've been testing on the daily chart, but I also wanted to show that both of them are rebounding within a channel. And as you see, here is the Aussie and here is the Kiwi. As you see, if you go down to a 4-hour time frame and you draw this channel, then you also have decent technical trigger for you to go short if you don't want to be short in advance and you just want to wait. Okay, I forgot to mention it before, so I just wanted to do so now. Let me go through some questions. Hello, when you trade, don't you care about the news? I'm guessing there's a question mark missing. I don't know if it's a statement or a question. Now, if you're asking if I care about the news, the answer is it depends. Sometimes I don't, sometimes I do. If, for example, I'm in a trade that is close to the entry point, yes, I do care about the news because, an event might, change the dynamic completely. Now, if I'm in a mature trading position that has already moved somewhat, no, it's not that I'm going to do something because there are some news. Okay. Go to the chat and see more questions. Good morning. Good morning. If I have an Apple sticker on my car, no, I don't. No, I don't. I don't put stickers on my cars. Coach, did you want to ask something?
No, Steve, it's kind of a quiet day, and
it's been a very quiet day.
Steve, if your voice is not too well, I mean, we can always end the webinar early. There's no point.
Absolutely. I just wanted to show a couple of things. One, look at the DXY. This rebound in the DXY, I'm not saying it's over because, as I've advocated like several times, you can never judge a corrective move in advance. But potentially, it might be already over, okay? Because this looks like a decent pennant. So bottom line, what I'm trying to say here is I'm still actively looking for opportunities to be short the dollar, even if we move a little bit higher towards 96.50, 96.75. I think that, the dollar should still be sold. And I do think that it remains, weak for the time being. And I know that Blake mentioned it very briefly, but I do agree 100% with him. The same deal, the same thing applies with USD yen. USD yen, as long as it remains below 108, it should be viewed through a bearish, set of eyes. Now, one more thing, I wanted us to have a look at the bonds, and here it is. Here is the 10-year one, the 10-year treasury. I just wanted to remind everybody that, we remain within an ascending channel, but we are definitely exhibiting some signs of momentum loss. So I'm carefully monitoring this. Also, add to that the fact that we've stalled at the previous high here. So I have to say that in the short term, I would be a little bit careful because the bonds can roll over and correct lower, and a correction can be a decent move. I mean, given the fact of how much we've moved to the upside, a corrective move can be decent. And the same deal here with the bunds. You can see here a possible ascending wedge. I think that the break below 172 for the bunds is going to point to a deeper correction. Likely
some Elliottians, Steve, are looking for 10-year yields to get back to about 217, and then another break to 170 on 10 years.
I can tell you that one area I would be looking for resistance once we start rebounding, if that happens rather soon, is here.
Okay.
Yeah, roughly at 230. So yes, if we do start rebounding, I would be looking for a rebound towards 230.
Yeah, because they're saying it's a 4. We're going to get a 4 here. So, it's hard to judge how much 4s can give you. 4s could be pretty good retracement moves, can't they?
They can, depends on the structure of the 5-wave move lower, of the previous 3 waves lower, to be exact, since we're talking about the 4th.
Okay.
But yes, they can be, but they also can be
weak.
Very, very frequently, 4th waves are corrections on time more than price. Okay, so that can happen as well. So you can have a triangle. For example, you can't have a triangle at a wave 2, but you can have a triangle at a wave 4.
Got it.
Okay.
Learn from you.
if there are no more questions, is inflation still an issue for the Fed? Glenn is asking. The Fed is always going to be claiming that inflation is an issue because they have nothing else to use to base the dovishness on. Oh, we have a question about Euro Swiss as well. Yeah, I'm going to cover that as well. So you want my honest opinion? Do I think that the Fed is truly worried about inflation? Absolutely not. That's pure BS.
They're worried about deflation.
When was the last time we had deflation, Dale? The last time we had deflation, it was for a few months during the financial crisis. Yeah, for a few months. That's it.
Right.
So,
but they were right, and look how devastating it was.
Yeah. So why? But the deflation was not a devastating. What recent
deflation of housing prices was?
What recent? Oh, now you're talking about a totally different thing. So now we're talking about the real deal. The real deal is sustaining the bubble, because the bubble is the only thing that keeps the economy in quotes standing. Okay.
Real estate prices and equity prices.
Because let me put back in place a usual misconception. It's one of the many distortions in reality that they've built so people can buy into what they're telling them. Deflation, drop in prices, is a healthy mechanism of a recession to be less severe to the masses. So what usually happens when you don't try to toy around with the natural events, first of all, a business cycle is something normal. To have a recession is something normal. It's part of the business cycle, which is there for a reason. It's to, in essence, rebalance the flaws that an economy has built during, and the mistakes and the malinvestments that an economy has built during growth. Okay. Now, what usually happens during a recession, if you let the recession, run its course without interfering, is that yes, during a recession, you have prices, if not dropping, at least not rising, which is good, because when you have a recession, a lot of people lose their jobs, a lot of people start making less money, incomes go down, so the purchasing power of the consumer, diminishes. So at least by prices not going up, you help a little bit with the situation. What the Fed wants to make sure that even during a recession, the prices keep increasing. There is nothing normal about it. And as I've said before, dollar doubled its value between 1800 and 1900. Okay. In essence, the US experienced more than 100 years of deflation. Those were the best 100 years of economic growth the US ever had. So whoever is, trying to persuade people that deflation is like the huge monster that is going to eat us all alive, they really don't know their history. That's
well, let me ask you this, Steve. The longest depression was after the Civil War in the US. It lasted, I think, almost 20 years. So that was a deflationary period that maybe it had something to do with the finances of how expensive it was for the war, and then the whole Reconstruction era.
But following that, the US had, an amazing spree of growth, right? Amazing. Yeah, it's natural. I mean, after a war, such a war, it's natural to, to have such an effect. I mean, it's nothing weird there, right?
Yeah, it was our deepest and longest.
Yeah.
After that. Yeah.
Anyway,
just a little history.
Europe is more experienced in that, as you know. European conflicts were, a lot more frequent, for centuries. Even before the US was ever,
Why can't we just all get along? Like we do, like our team.
Yeah, because
why can't every government and team be like ForexAnalytix and like each other?
Because conflict is part of the human nature, unfortunately.
I'm going to
no, it isn't.
When I see
no, it isn't.
All right, there we go.
Okay.
All right.
Okay.
Okay, go ahead. Why isn't it?
I'm
No,
just
he's kidding. He was trying to create a conflict to joke about.
Oh. All right. So
Okay.
want to wrap it, Steve? Still?
No, because I've promised a friend here that I'm gonna.
Oh, okay.
He's
I
got
want
another half hour.
Stelios to say the tagline when we sign
I'll
off
do that.
today.
Okay.
So Euro
All right.
Swiss, here it is. Just wanted to say about Euro Swiss, we've broken down from this range. You can even see it as a slightly descending channel. And as I said the other day, 110 is the next area of support, and obviously 111.50 is resistance. So, maintaining a bearish bias towards 110 makes sense. Although I'll have to state the obvious here, and the obvious is don't expect this to go fast anywhere, towards any direction. Okay,
Captain Obvious.
yeah, because
He's on TV all the time.
yeah,
Captain Obvious.
because the S&P is obviously all over it. So I wouldn't be expecting any, strong moves one way or the other. Even if we move towards 110, which is the next area of support, it's going to happen in an orderly fashion, slow and easily. So, in all actuality, if you want to trade the Euro Swiss and have it make sense, probably you need to use more leverage than you would use in something else, because it might end up moving like 5 pips per day on average in one direction. Okay, so not really worth investing there. Thank you, Coach.
Okay.
Have a nice week, everybody.
You too.
Okay, so I want to wish everybody a good weekend, and remember, like Dale says, don't just count your pips, count your blessings. Thank you, Dale. Thank you, Steve. Thank you, Blake. Thank you, everybody, for another
I
great
count
week.
you two guys as a blessing in my life, and the whole ForexAnalytix team, and all the people that join us every day, and especially the people that support us and become part of our trading community. So thank you, Stel and Steve and Face, and everyone have a great weekend. Enjoy the summer, and we'll be back looking to have a great week and helping traders again next week. So enjoy your weekend, and thanks again, Steve and Stel and Blake for putting together a company that I think is serving the FX community quite well. Glad to be part of it. So adios, everyone. See you, Stel. See you, Steve.
Thanks, Dale.
All right, guys. That's a wrap. Don't forget to join and get ready for next week. It's going to be a good week next week. That's my call. We're all going to do well next week. That's my hope. Talk to everyone later.